Most business owners fail not because they had a bad idea, but because they run out of money, especially at the wrong time. If that hit home, then this video might just save your business. My name is Calvin Russell Jr., and I'm a certified credit strategist and CEO of 850 Club Credit. And today I'm going to be breaking down 5 of the most popular ways to get funding for your business, plus a bonus option that most people overlook. And if you stay until the end, I'll also show you a funding method that can grow your business over time. So let's get right into it. You already know cash flow can easily change overnight. A slow week, a late client payment, or even a new piece of equipment that you didn't plan for, and suddenly you're running out of cash or you're out of cash completely. That's where understanding your funding options can change everything. There's no single way to fund a business. Everyone's situation is different. Everyone's business is different. So it's going to depend on how long you've been in business, how your revenue looks, and what your credit profile says as well. So let's start with one of the most common paths. Number 1, business credit cards. Now, if you're just getting started, business credit cards are one of the easiest and fastest ways to build your business credit, and not only that, but give you access to working capital. These cards work almost like personal credit cards, but the limits are often higher, and most report to the business credit bureaus like Dun & Bradstreet, Experian Business, as well as others as well too. Now, they also help you separate your personal and your business finances, which is huge. And that's also a big step toward protecting your personal credit. Some examples might include Capital One Spark Card or the American Express Blue Business Cash Card. But here's the catch. In order to get approved, lenders still look at your personal credit unless your business is already established. That's why option number 2 has become so popular. Number 2, revenued business card with a flex line. Now listen, if you run a business, you already know that cash flow can easily change fast. That's why having access to funding when you actually need it is very important. Now, Revenued offers a flexible spending line that's based on your business revenue, what you're actually bringing in, not your personal credit score. There are no origination fees, no maintenance fees, and no draw fees, regardless of how much you need. Now, you can access the funds in as fast as 24 hours with decisions in as little as an hour. And you only pay for what you use. The best part about this is, as your revenue grows, your spending limit can grow as well. Plus, it also helps you build business credit, and it reports to Dun & Bradstreet, which is also going to help you build your business credit over time in general, okay? Now, if your business can still use a reliable way to cover expenses, manage the growth, or handle slow seasons, scan the QR code right here on your screen or click the link in the description to learn more. It's fast, straightforward, and it can give your business the flexibility that it needs to move forward. Now let's go to number 3, because this is another one that a lot of people don't know about or they're not using it properly. Number 3, SBA loans. Now, the SBA loan is one of the most affordable ways to fund a business, but it does require patience and paperwork. The Small Business Administration, they partner with lenders to guarantee a portion of that loan, which lowers the risk for banks, and it also keeps interest rates low. These loans are great for business expansion, equipment, or even buying a building, but you'll need strong documentation, tax returns, bank statements, and proof of revenue. Typical SBA programs are going to include the 7A, the 504, and a microloan program as well. But here's the thing, it's completely worth it, but they do take time. That's why some businesses turn to option 4 to get cash even faster. Number 4, Invoice Factoring, also known as invoice financing. Now imagine that you've done all the work, you sent the invoice, but your client still has 30 days to pay. With invoice financing, you can sell that invoice to a funding company and get most of your money upfront, typically within 24 hours. They collect the payment from your client later, and you get the balance minus their small fee. Now, the small fee is going to be different because every company is going to have different setups, okay? But it's a lifesaver for a lot of businesses that deal with slow paying clients or seasonal sales. The key is to use it as a bridge, but not a crutch, okay? And to understand the fees before you sign anything. Now, what if you don't have cash invoices, but you still need cash fast? That's where a merchant cash advance is going to come in, which is number 5. A merchant cash advance is not a loan. It's a purchase of your future sales. Let's say, for example, you receive a lump sum based on your average daily sales, then you repay a small percentage of each transaction until it's paid off completely. Now, this way is fast and funding can hit your account within 1 to 2 days, but is one of the most expensive forms of financing if you're not careful, which is why I left it at number 5, okay? The best time to use it is when you know the money will generate more revenue, like inventory for a high demand season or a marketing campaign with a proven return on investment. And remember, a merchant cash advance should only be a temporary solution, not a long-term strategy, and not something you want to get in the habit of constantly doing. Now, since you stayed to the end, I got a bonus for you. Number 6, a business line of credit. Now, as promised, let's talk about one of the most powerful tools that you can get as your business grows, okay? That's a business line of credit. It works just like a credit card, but with higher credit limits and lower interest rates. You only pay interest on what you use, and when you pay it back, your limit resets. This is going to give you ongoing access to capital whenever you need it. This is the funding type that most experienced business owners use to manage their growth and stabilize cash flow without touching their personal credit, because a lot of times people rely on their personal credit. You can get a line of credit through your local bank or online lender like a Blue Vine, On Deck, or even there's plenty of fintech companies that are out here that specialize in revenue-based approvals like Revenue, like I'll talk about before. Now, if you've been struggling to keep your business funded, remember, you don't have to rely on just one source. The smartest entrepreneurs, they build a mix of credit cards, funding lines, and credit reporting tools to keep their business moving forward. And if you're ready to get your personal credit in position for business credit, be sure to grab my free credit guide using the link in the description below or scan the QR code. And listen, if you like this video, you're most definitely going to love the next one. I'll see you there.